Hey, welcome to the Closing Beat, everybody. Happy Thursday already, right? Like, you guys with me? Like, the week kind of went by quick. Sometimes when there's a lot to focus on, the week goes by pretty quickly. And, of course, with the Fed and all the econ numbers coming out and earnings just killing it there, everything is, just blowing by. Everything good over there? You like? You're good? Okay, you're feeling good? I like that. It's good positive attitude there. We're financial advisors here at Jazz Wealth. Very laid back, of course. We don't try to make things professional. We actually don't know most of the big words that you see on TV, if we're just being honest with you there. Tonight, one of the things we're going to do is called Wine and Wealth. Every Thursday, we do it for clients. It's private. It is in our custom home-built portal that we literally built here ourselves. And Eric's going to cover a couple updates, and then all the things inside there, where you should be looking, where do you get the most out of Jazz here as you're working with us. And so that'll be coming up. If you want to play Guess the Dow, as you saw on the pre-screen there, you're welcome to play. jazzwealth.com/guess the Dow. And if you're the closest without going over, we'll send you $100. We would do more, but we're not allowed to give or receive more than $100. Fun fact, that's an SEC rule for a regulation for financial advisors. If your advisor tries to give you more than $100 or something worth more than $100, or you give them more than $100, that's a no-no. Not supposed to do that there. So we have to leave it at $100. But they didn't say how often we could do it, so we do it every week. All right, let's take a look at the stock market here as we go, because that's really what you're here for. You don't care what I'm rambling about. If you look at the S&P, we're pulling back, right? Just like the title says, the stock market is perfectly following all of the historical data that shows what it normally does this time of year. We'll cover some of that as we go. So it's pretty exciting to see what is expected and then just to see it play out. But aside from the banks, of course, that's a whole nasty little area there. The S&P is still up 5.8% year to date, although it has pulled back a few percent. No problem there. Today, actually, I'm going to go over here. Today we started with a gap down. We'll use a 5-minute chart. And here's where we started. Well, that's pre-market. I've got pre-market loaded up. We go right in here. We start with a little gap down and then just choppy all day. No real progress one way or the other, which is kind of okay, right? As you're pulling back, we go back to the daily chart. Think about this for a second. If you're pulling back from an area, do you want a COVID type pullback where, the Band-Aids just ripped off like everybody at the same time? Or would you rather have a pullback that has little fits and starts? That's how you know it's a normal profit-taking, cautious type pullback. People are not fearful. They're just adjusting, saying, maybe I'll just go put some money in a money market account like we shared with you yesterday. So no problems there, at least as of the moment. Sector-wise, only real estate and utilities were able to post a gain here today, and it was really the only consistent strength throughout the day. While the market was doing this, utilities and real estate were kind of steady to the upside there, and this was really due to, check this out, the 10-year. So what I'm showing is the actual 10-year here back to highs. And it's doing the same thing as the market. Nobody wants to be the first. Look how close that is. No one wants to be the first to pay above that highest price, which means yields would hit a somewhat recent low. So remember, as prices go up, the 10-year goes down. That's good news for people that want to borrow stuff or want to see interest rates go down. But Dustin, I thought they just raised interest rates. That's weird. Remember, the Fed's rates will trickle down to other areas. Credit cards are always the first to adjust their rates. It's a ripoff. But they will trickle down to your mortgages and they'll trickle down to your car loans and things. But just because the Fed raises rates in one day, that's the rate that they charge banks to each other to borrow money back and forth when they find themselves a little short. Not FRC short, a little short, right? So that's what that is. And the idea is that that would restrict the amount of borrowing that takes place. It would restrict the transactions inside of a bank that have to do with lending. And so one of the ways they restrict lending is they say, we were going to charge you this for your personal loan or car loan or whatever you're getting. And we're going to charge you this now. And maybe half the people say, no, I don't want to do that. Some people say, I have to do that. That's what I want to do. And that slows lending down. So a lot of comments wrapped around that. And a really brief kind of an answer there as to why things are doing what they're doing. All right, financials as a whole today were one of the big draggers there. And it was really led by the smaller names. There's still, these guys are losing their minds over here. Here's the regional banks. Give you an idea of all banks X Goldman Sachs and JP Morgan, Bank of America. Though those were down too, here's the performance of just those not monstrously large banks, right? So you get a little way to zoom in there. Inside, of course, it's a tough place to invest, but you're getting parabolic again, so crazy. PacWest Bank here, this is pretty much in the news today, more of a stock in the news. Exploring options, we talked about this yesterday. It's not looking good for them. They're going to be maybe the next on the chopping block there to maybe get bought out. First Horizon, this is a little different story. Although it was down today, it would be really easy for me to say, look at how nasty, and just pretend that that's part of the excitement. However, this is a different story. Them and TD Bank were going to merge. They were going to create a really big bank, and they couldn't get past some of the regulatory issues because if you're familiar with TD Bank, they've had some troubles with regulators, not financially, but they haven't really done things on the up and up. They've been one of those that you got to pay attention to, or they'll shift some things around, try to get one up on you, kind of like Wells Fargo did for a while there. Well, that deal fell through. And it's just because of regulatory approval. They couldn't get it through. Regulators said, we can't trust you as TD Bank. Why should we let you make yourself larger? That seems a little dangerous. That's exactly what happened. The one piece of good news is First Horizon is going to get a $200 million breakup fee. And it's not like cash that they're just going to wire over to their bank account or anything. But still, that's helpful for them. Nonetheless, you combine that with the stress in the bank world right now, okay. That's kind of a tough one there. All right, moving on. So the Dow's negative year to date. Oh, did it close? Yeah, so the Dow's, all right, so it's down point something, 0.05% for the year. All right, it says flat, but pulling back into that negative area. Remember, the Dow hasn't really done a whole lot this year. So to see it go negative and positive, you'd normally get frustrated by that if you were watching the NASDAQ and you were a tech investor. Okay, that pisses you off a little bit. If you're watching the S&P and you're an S&P investor, okay, that's frustrating. But with the Dow, you don't have a lot of Dow index investors. So when that happens, it probably doesn't even make much of the headlines there. We just said the NASDAQ there, so we'll talk about that. It is still by far the leader. Look what's happening here. Just a steady uptrend here for the NASDAQ, but it's also pulling back down. It's up 18% year to date, so still looking pretty good and by far the leader, right? The S&P is up 5, and that's in second place. Or 6, let's call it 6. Russell 2000 is the only one that is confidently down on the year. It's down 2% and flirting with breaking through these lows. Small caps. It's just all small caps in that space there. So it's kind of a tough one for them. Now, like I said, all the short-term data that we've been sharing is playing out rather nicely here. Remember that right now, the speculators in the futures market have the largest net short position that they've had in over 10 years. So we shared this with you that through the month of May, their bias is to the downside. Well, that's playing out. That's looking pretty good for them. In other words, those that are more short right now are happy to just let the markets actually float away or float to the downside there. So when you look at the S&P, will those people who are short, who we already know are just positioned for the markets to fall, will they suddenly change their mind? Why would they change their mind? Things are going really well for them. So that pressure to the downside, or I should say lack of pressure to the upside, is likely to stay in place. That makes it kind of difficult, right? So something to think about there. And remember, this is also for the short term. So this is not, these are not long-term investors. These are people that pile into the futures market, cause that pressure to the downside, and they're active. They're speculators. That's what the word I probably should have said there. All right. Also, what we have is the sell in May and go away phenomena taking place here, at least the start of it. What tends to happen in the beginning part of May? That's where we see historically the most amount of weakness. On this chart here, we're showing you all the average performances from 1950 to 2022. In other words, what's the average on day one? What's the average on day two? What's the average on day three? Through the whole year, but we're doing this from 1950 to last year because that's all we have full year data for. So this is a couple days old, but now that we get into here, the pressure, the max amount of pressure on the market tends to happen right around May, at least if we're talking about from May all the way through October. So we expect to see a pullback. Doesn't mean it's going to be this steep. It means that this is normal to see a pullback. Maybe it's a little larger this time, maybe a little smaller, but to go into the first part of May with a pullback there is totally normal and historically something that happens in the market. Pretty cool, don't you think? What's going on over there? Okay, what else do we have here? This was the other thing that I shared with you guys. Volatility is already priced in. This hasn't changed, by the way, right? So this is still exactly the same as when we shared it with you. So in the month of May, those that are participating in the bet that volatility will expand, that the markets will get wilder, even if only by a little bit, is priced in for the month of May. In other words, if there's not a lot of volatility, there's going to be extreme pressure on the volatility index. But we don't see that. We see volatility slowly increasing, and what happens as you get through the month of May, that's where the excitement happens. Combine that with what I just shared with you, that the first part of May is where we tend to see people go, okay, fine, sell in May and go away. You put those two things together, in addition to the most amount of people being short over the last 10 years, at least in the futures market. What do we have? Do we have anything bullish there? Do we have any reason to suggest that there are people that will magically change their mind and go and be bullish again? No. It's not a bad thing, right? Is it? You look at the stock market and you say, well, that's not a bad thing. I welcome a pullback. Come back to the bottom of the range. Come be undervalued again. Give me some of these stocks to pull back. NVIDIA, AMD, I mean, all these stocks are like, what? They're up so much for the year. We welcome that. So it is not, don't let me mislead you here. It is not doom and gloom, because if there ever is the opportunity for doom and gloom, I will talk doom and gloom. But for the moment, we just have people going, market's not worth this. Therefore, I'm going to position for a pullback. We've done the same here at Jazz. We are positioned for a pullback. We're not bearish, but we want a pullback. And so now we say, okay, now that you have it, give us a pullback. Can we participate? Where should we participate? And start going from there. All right, stocks in the news here today. I was disappointed. I didn't do the math for you yesterday. I should have done this. Budweiser or Anheuser-Busch. InBev is what you're going to find that they're called there. They beat overall on earnings. Remember, it's a global company there. They did see a 1% decline in the U.S., and part of that was the start of everybody getting pissed off and not buying Budweiser. Now, where that started hit them just a little bit. We'll see the bigger adjustment. They even said this themselves. We'll see the bigger weakness here in the U.S. start and show up in next quarter's earnings. So a little bit anticlimactic there. They said Bud Light issues will show up fully in the Q2 quarter. That means they saw issues. So if you are one of those that's for or against whatever they did there, you're going to see that next quarter. I should have been more clear about that yesterday. SolarEdge. This is a pretty easy and clean beat overall there. They showed a couple things. Number one, that their margins are getting wider, and they have a run rate to a wider margin level. So they essentially look out through the rest of the year and said, you're seeing our margins expand. That's always good, right? Higher profit margin. And we think we'll be able to continue to do that. Also, people look at SolarEdge and they often say, well, it's tough because they're not really diverse. They combated that as well. Sales outside the U.S., very strong. No problems there. And also, I was personally looking at them more in depth because I wanted to get a little more clarity on will the Treasury pay the 11 cents per watt for production or not. These guys are on the fence, or the Treasury's on the fence with that. And that's because their production's not supposed to start till later in the second quarter, later in the third quarter. And so I didn't get anything on that. There was actually nothing to help me with that. So we'll have to keep track of that one there. Mercado Libre showed that it gained more business in Brazil. However, Brazil's not having the best of times right now. They tried to combat initially what they talked about by saying, or their earnings, they tried to combat by saying, we are very confident that our margins will grow over the next few years. That was part of the problem. The previous earnings report, they said, we are very confident that our margins will expand over the next 2 quarters. So they did like the Fed did. They just changed the words and hope you didn't know. I don't know for sure, but that would probably be part of the reason why the gap faded away. There you go, Shake Shack. Yeah, we happen to own this one, so I'm happy to see it higher there. It was a beat. They did great. Margins were as expected, so we would have liked to see them a little bit stronger there, but more store volume, more sales at the same stores, call them comparable store sales. So there was, sometimes you read an earnings report and you just kind of glance through it and go, we're good, right? Other times you look at it and you're like, I'm going to need to take a little deeper look at this one. Peloton was one of those that I wanted to do that with because I kind of thought it would wake up. We don't own it, but I was kind of curious to see if there's an opportunity here because Peloton beat on earnings and everything. They still lost money, but they beat on earnings, but we're looking for that turnaround. Not in the stock, but in the company. What they're doing is they're moving away from relying so much on selling really expensive bikes and other equipment. And they're moving into now, we need to sell subscriptions. Those are massively higher margins. Selling hardware, low margin. Selling subscriptions, high margin, right? So they're moving into that. We're still waiting, right? So I have been watching that just thinking, boy, if they could do that, that really boosts their overall margins, their overall potential profitability. They just haven't really done that yet. Not bad, it's going the right direction, but I don't think anything to get excited about just yet. Yeah, so there you go. Hey, tonight on Jazz After Dark, we're going to talk about some really oddball ETFs. I don't do this often, but I was reading an article and I was like, there's some that I like. Maybe I'll share those with you guys. ETFs that are just sort of wacky, and I'm going to research them with you in real time to show you some of the things that I look at that may be potential warning signs, or at least know how to join or jump into the ETF if you're going to participate in them. So some fun ones. And then my personal favorite ETF, I will share with you as well. Not personal favorite that I want you to go buy, just I think it's cool what they do. Like I think the concept is cool. I don't own it. I will not be talking about buying it, but I think it's kind of cool, fun to talk about. Don't forget, Wine and Wealth here tonight with Eric. He is looking forward to hanging out and joining you tonight. And I think he's already in there getting his hair ready and stuff. So, we'll see how he does. I officially cannot see the questions. So we'll try to trick the system here and see if I can sneak in over here and cheat and watch as a user and see if I can see your questions. I officially can see your questions now. Pop out and see what I can do. Yep. Subscription's nice, they say. So the subscription plan is nice. You know what the one thing that analysts look at for Peloton and say, I don't think they're going to be able to do it, is because people are so hit or miss with their working out. So the thought is like, you could have a subscription plan, but it better be a lower price because otherwise people will work out for January and then they'll just give up. And that means they may cancel their subscription. So I've seen that from numerous analysts comment on that. And I'm like, that's a pretty good point. You buy this really expensive bike and it's easy to just put a towel over it or not use it. But if you have an ongoing subscription, hopefully you get yourself pedaling. Yeah. Nope, not the Jets ETF. I actually don't care much for the Jets ETF because there's not enough there. Like that's one of those industries where it's just easy to go build your own portfolio. So I don't see the advantage of paying for an ETF there. Yeah. Yep. I didn't catch any the AMD Microsoft news. I was looking at Qualcomm and trying to get a heads up on Apple's earnings today. Qualcomm with not the best of news, and that's partially what hit Apple today. Caitlin says, when you see an overbought market in the short term, should you skip a week of Roth IRA contributions and double up on a pullback? I'm not that zoomed in. Like I won't go necessarily week to week. I'll watch the market as a whole and just be like, all right, it's trending higher, normal dollar cost averaging for me. And then as the market pulls back, whenever that starts to happen, that's when I'll add a few more dollars. So I wouldn't do it and say like, well, this week I'm going to change it, but next week I'm going to change it back. I don't look at it that granularly. Yeah, Chris, that's true. Maybe Peloton make it like, you got to find the cancel button. You got to find it. Joe says, thanks for getting back to the emails so fast that I send. Yeah, oh, Joe, man. Well, see, now Joe's asking questions. I like that, Joe. I'll never run away from that because you're thinking. I like the way you're like, oh, it's a little question, maybe I don't know if it's like a big deal, but I'm going to ask the question. I love that because then I know you, and now my brain starts racking like, well, wait a minute, why would your uncle want to do this? And so it makes me think a little bit more about, I might go left with this answer, I might go right. Let me see what's going on here. But you're very welcome. John says, what are your thoughts on the banking stock? Super extended, but sad news. I would not be an individual bank stock picker here. I think that'd be really difficult. You know, I would want to. I love oversold stuff. But I think this is one of those ones where I would be using an ETF. And I would probably be using options there just because I don't want to guess that this is the end. There's a lot of moving and shaking happening behind the scenes. And I like volatility, but I don't like not being able to quantify the volatility that stock is having or that ETF or whatever. So you're basically going to have to push me into them. All right, I'm going to wrap it up here. Got to get out of here today. Eric's going to take over in a little bit in the speakeasy over there and enjoy hanging out with him here tonight. I wish you guys a great rest of your day. Thanks for hanging out with us, considering us, and subscribing and liking all the stuff that we do. Really appreciate that one. And adios. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.